Hi friends, this is Mr. Nagaraj. Today we are going to discuss depreciation accounting. Depreciation means gradual decline or loss in the utility value of an asset due to wear and tear in use, passage of time, etc. Friends, depreciation is charged on all fixed assets except land and antiques. Antiques are old historical monumental items whose value may increase. Land is not a depreciable asset since its life is infinite. Depreciation is a non-cash operating expenditure and it is to be debited to the profit and loss account to find out true financial performance of the business concern for a stated period of time. Accounting Standard 10 as well as Companies Act 2013 allow depreciation to be charged on a component basis. Each part of an item of property, plant and equipment with a cost that is significant in relation to the total cost of the item should be depreciated separately. Friends, one important factor is to be kept in mind while charging depreciation. That is, depreciation is charged from the date it is ready for use. It is not the actual date of the use of the asset. Friends, now let us discuss what are the causes of depreciation. Depreciation is caused because of various factors. Important of them, number one, physical deterioration. This arises due to wear and tear resulting from use of asset, erosion, rust, rot and decay from being exposed to wind, rain, sun and other climatical factors. Physical deterioration even may occur because of careless handling of the asset when it is used. Number two, economic factors. When use of the asset becomes uneconomic for the firm, although it may be operational and good in physical condition, this may be due to changing technology or changing consumer preferences. Number three, time factors. There are some fixed assets which lose their value by passage of time. This may arise due to contractual or statutory reasons. Example of such assets are lease, patents, copyright, license, etc. Number four, depletion. Natural resources such as mines, oil wells, quarries deplete due to extraction of raw material from them. These are known as wasting assets. Friends, now let us discuss the need for providing depreciation. Depreciation is necessary due to following reasons. Number one, measurement of correct profits. If depreciation is not charged, true financial performance of the business concern for a stated period of time may not be truly found out. To reflect true financial performance of the business concern for a stated period of time, depreciation is to be debited as per the concept of matching. As already we have learned that all assets are subject to depreciation except land and antiques. By passage of time, by use or any other factors which we have discussed above, the value of the asset may come down. To the extent of the value of the asset has come down, that value of the asset which has come down is to be debited to profit and loss account to reflect true financial performance of the business concern. Otherwise, the profit or loss of the business concern may go understated or overstated. Number two, for showing true financial position. One of the fundamental objectives of the preparation of financial statements is to show true financial position of the business on a specified date. Depreciation is to be charged to the debit of P&L account as well as it is to be deducted from the cost of the asset to arrive at its true book value. Friends, what is book value? Cost price of the asset minus depreciation till date. Number three, provision for replacement of assets. Friends, already we have discussed that business runs on going concern basis. Going concern concept is one of the important fundamental accounting assumptions. The entrepreneur assumes that he runs the business forever or he has no intention to wind up or to discontinue the business in the near future. Every asset has fixed life except land. Hence, after the expiry of its life, such assets are to be replaced. For replacement of those assets, enough funds are required. So, as per the concept of provision of replacement of assets, the amount of depreciation is set aside and kept as a reserve, and that amount is invested in the risk-free securities. At the end of the term of the useful life of the asset, those securities are disposed, and with the proceeds of those funds, new assets are replaced. Number 4, legal requirement. The Company Act as well as Income Tax Act has prescribed certain rates of depreciation which are to be mandatorily observed, and as per those rates, depreciation is to be charged. Friends, now let us see what are the measurements of depreciation. Following factors are to be taken into consideration while calculating the depreciation. Number 1, cost of asset. What is cost of asset? Cost of asset means the purchase price, that is acquisition cost, and other all such expenses which have been incurred in relation to the purchase of that asset, and any other expenditure to bring that asset to the present condition and location. Meaning thereby, proper calculation of the asset is very, very important to reflect true financial position of the business concern. Otherwise, the asset's value may go understated or overstated. Number 2, useful life. Every asset has certain useful life. It is to be properly estimated and measured, having taken the guidelines which are being prescribed in the Companies Act 2013. If life of the asset is not properly estimated, again the asset may be subject to overvalued or undervalued. Number 3, scrap or salvage value. After the useful life of the asset, and when that asset is sold, if it has some value, that value is termed as scrap or salvage value. For charging depreciation or for calculating depreciation, such a salvage value or scrap value is to be deducted from the cost of the asset to arrive at depreciation. Friends, now let us see what are the important characteristics of depreciation. Depreciation has the following characteristics. Number 1, depreciation is the fall in the value of fixed assets. Number 2, depreciation causes perpetual, gradual and continuous fall in the value of the asset. Number 3, depreciation does not depend on fluctuations in market value of the asset. Number 4, depreciation is a charge against revenue of an accounting period. Friends, it is very, very important point to make a note, that is depreciation is a charge. Already we have discussed that depreciation is a non-cash operating expense which is to be debited to profit and loss account to calculate true profits of the business concern for a stated period of time. Number 4, depreciation occurs on account of use of asset. Number 6, total depreciation of an asset cannot exceed its depreciable value. What is depreciable value, friends? That is nothing but book value, cost less scrap value or salvage value. Friends, now let us discuss the entries for depreciation. The entry for amount of depreciation at the end of the year will be depreciation account debtor to asset account. Friends, why we have debited depreciation? Already we have known that depreciation is a non-cash operating expense. All expenses are to be debited. Since depreciation is a non-cash operating expense, it is to be debited. And then why we have created the asset? Friends, we have learned that asset shows debit balance. If the asset value increases, we have to debit. If the asset value decreases, we have to credit. Because of the depreciation, the value of the asset decreases. So, the entry for an amount of depreciation is depreciation account that are to asset account. Already we have learned that all nominal accounts are to be closed and they are to be transferred to P&L account of that particular period. Since depreciation is an expense and come under the bracket of nominal account, it is to be closed and to be transferred to profit and loss account. Then the relevant entry for such closing and transfer is profit and loss account at R2 depreciation account. Friends, even we have an alternative method when the business enterprise wants to show the asset at its cost price, that is equation price. Then the relevant entries for depreciation. Number 1, provision for depreciation. Entry for provision for depreciation is depreciation account at R2 provision for depreciation account, and then it is transferred to profit and loss account. The entry is profit and loss account at R2 depreciation account. The ultimate single entry also we can make, that is profit and loss account at R2 provision for a depreciation account. Friends, if the asset is sold in the meanwhile, if profit is made on the sale of such an asset, the entry is bank or cash account at R to profit and loss account to asset account. If any loss is made on the sale of asset, such loss is to be transferred to P&L account to the debit side. Friends, now let us see what are the methods of depreciation. Number 1, straight line method, also called as fixed installment method or original cost method. Number 2, diminishing balance or reducing balance method. Number 3, sum of years digits method. Number 4, annuity method. Number 5, depreciation fund method or sinking fund method. Number 6, insurance policy method. Number 7, revaluation method. Number 8, depletion method. Number 9, machine R rate method. Number 10, product units method. Now let us discuss the method of depreciation one by one. Number 1, straight line method. The most popular method of depreciation based on time factor is the straight line method, which is based on the following formula. Depreciation is equal to cost of the asset minus salvage value divided by useful life of an asset. Friends, this is one of the simplest methods of calculating depreciation, which is widely accepted even by the income tax authorities. Now let us see one example with the help of which we will calculate profit or loss on sale of asset as well as depreciation to be charged for each year. Example, Gaurav Limited purchased on 1st January 2011 a small plant for rupees 20,000. On 1st July in the same year, additional plant was purchased costing rupees 10,000. On 1st July 2012, the plant purchased on 1st January 2011 having become obsolete is sold for rupees 8,000. On 1st July 2013, fresh plant was purchased for rupees 24,000 and the plant purchased on 1st July 2011 was sold at rupees 8,400. Depreciation is provided at 10% per annum on original cost every year. Calculate the profit or loss of the asset and depreciation. Friends, there is a note, that is accounting year is calendar year, that is January 1st to 31st December. Friends, now let us calculate the amount of depreciation to be debited to profit and loss account in 2011, 2012, 2013. First, let us see depreciation for 2011. Friends, Gaurav Limited purchased on 1st January 2011 a small plant for rupees 20,000. On 1st July in the same year, additional plant was purchased costing rupees 10,000. Meaning thereby, there are two transactions in the year 2011. He bought two plants, one on 1st January 2011 and second one 1st July 2011. The first plant worked for full year and second plant worked for 6 months. Depreciation on the first plant on rupees 20,000 at the rate of 10% for 1 year is rupees 2,000. Depreciation on second plant on rupees 10,000 at the rate of 10% for 6 months is equal to 500. That is, depreciation for the whole year is rupees 2,500. Friends, already we have discussed that depreciation is to be transferred to P&L account of that particular year. Then depreciation for 2012. Friends, let us see here on 1st July 2012, the plant purchased on 1st January 2011 having become obsolete is sold for rupees 8,000. That is, I repeat again friends, on 1st July 2012, the plant purchased on 1st January 2011 having become obsolete is sold for 8,000. Meaning thereby, the plant which is bought on 1st January 2011 is being worked for 6 months in 2012. Therefore, we charge depreciation only for 6 months. Then, depreciation on rupees 20,000 at the rate of 10% for 6 months is equal to 1,000. Then, the second plant which is bought on 1st July 2011 is not being disposed, meaning thereby still it is in operation. Then, depreciation on the plant purchased on 1st July 2011 which is in operation for full year. Then depreciation is equal to 10,000 at the rate of 10% for 1 year is equal to 1,000. Then the total depreciation is equal to rupees 2,000 rupees. Then depreciation for 2013. Friends, again I read the second paragraph. On 1st July 2012, the plant purchased on 1st January 2011 having become obsolete is sold for rupees 8,000. On 1st July 2013, fresh plant was purchased for rupees 24,000 and the plant purchased on 1st July 2011 was sold for rupees 8,400. Meaning thereby, the second plant which is purchased on 1st July 2011 is being sold on 1st July 2013. Therefore, the plant which is bought on 1st July 2011 is being in operation for 6 months in 2013. Therefore, we charge depreciation for only 6 months. Then depreciation is on rupees 10,000 at the rate of 10% for 6 months is equal to 500. Friends, Gaurav Limited purchased another machine for rupees 24,000 on 1st July 2013. That is, this machine which is bought on 1st July 2013 is worked for 6 months in 2013. Therefore, we need to charge depreciation on rupees 24,000 at the rate of 10% for 6 months is equal to 1,200. Then the total depreciation is equal to 1,700. Friends, okay, let us see again. Depreciation for 2011 is rupees 2,500. Depreciation for 2012 is rupees 2,000. Depreciation for 2013 is 1,700. Now, let us see the calculation of profit or loss on sale of asset. To calculate the profit or loss on sale of asset, first we need to calculate original cost, sale price of the asset. Then from the original cost we have to deduct depreciation to arrive at WDV or book value. Here the original cost of the asset sold on 1st July 2012 is rupees 20,000. It is worked for full year in 2011. The depreciation for 2011 is rupees 2,000. It is worked for 6 months in 2012. Depreciation for 6 months is rupees 1,000. Then WDV is equal to 17,000. Okay, or even it is called as book value of the asset sold. I repeat friends, original cost of the asset minus depreciation till date is equal to book value of the asset or return value of the asset. Then sale price of the asset given here is rupees 8,000. Since sale price of the asset is less than book value of the asset sold, then there amounts to be loss. Then loss on sale of plant is rupees 9,000. That is book value of the asset minus sale price of the asset. Okay, here the loss on sale of plant is rupees 9,000. Repeat friends, when selling price is less than book value or WDV, then it results to loss on sale of plant. Then such loss on sale of plant or asset, whatever it may be, it is to be debited to profit and loss account. Then let us calculate profit or loss on the machine sold on 1st July 2013. The machine which is sold on 1st July 2013, the original cost of that machine was rupees 10,000. For 2011, depreciation rupees 500. For 2012, depreciation rupees 1,000. For 2013, depreciation rupees 500. Total depreciation for 3 years rupees 2,000. Then book value of the asset sold is rupees 8,000. Friends, we are given that sale price of the asset is rupees 8,400. Here, the selling price is more than book value, then it results to profit on sale of plant, which is to be credited to profit and loss account. Friends, we'll discuss more methods in our next video. Thank you.